Hi, everyone. I am Cynthia Murphy, investment strategist at Verify. Welcome to ETF 360. Today, I'm joined by Michael Schnackenberg, who's head of distribution for Eventide Asset Management. Mike, as you go by Mike, welcome to the show today. Excited that you're here. Let's learn a little bit about Eventide and what you guys are doing in the ETF space. So, tell us a little bit about the firm, the investment philosophy, the history, set the stage.
Yeah, thank you, Cynthia. It's a pleasure to be here. And yeah, Eventide is a Boston-based boutique. We're a values-based firm rooted in a biblical worldview, which actually ties into our philosophy. But before I dive into that, I just want to kind of set the table for why are we doing this? Why are we launching these ETFs? We really believe that there's an issue in the marketplace that has really gone unchecked for quite some time, and that's just around values misalignment. We think the vast majority of faith-driven individuals are unknowingly investing in and profiting from the products and services that are really causing the problems they're trying to solve, or hoping that God will solve in their investment portfolio. And we think that's unnecessary. And so our foundation at Eventide really started with a view that investing is ownership. And that's really core to our philosophy today. We believe that as investors, we are part owners of these businesses. And we want people to be able to root for what they own. We think that business has proven time and time again that has great opportunity and capacity for impact, and also has the opportunity to directly contribute to human flourishing. So that's really the core of our investment philosophy and how we approach investing here at Eventide.
Yeah, what I love about that is the concept of investing is ownership, which is so basic, but I think a lot of times that gets lost. I remember when my daughters first started investing, it was funny too. That was so obvious because it was like, what do you want to invest in? It was immediately their name dropping companies that they believe in. So values and investing are very closely aligned, but it can get lost in the conversation. And I think what I love is cool about the ETF space is that you have tools where you can actually do that and implement based on your values. So at your firm, you talk a lot about the power of systematic investing. Your ETFs, which we will talk about in a minute, use a methodology that I saw mentioned a lot, the Business 360. So walk us a little bit through, what makes the offering unique.
Yeah. Well, first of all, I commend your daughters for thinking that way, because I think many of us as investors have been totally intermediated or divorced from our values as we think about the companies we're investing in, and it's become quite opaque. And so I think bringing shedding light on that and that ownership aspect is really compelling for us. And I think it creates a unique opportunity to see the impact of your capital at work. But Business 360 really is the framework for how we approach our screening process when we think about what do we want to own, what are we going to root for as owners, and really it's three dimensional. We have an avoid, embrace, and engage process. So right off the bat, we're looking to avoid any product or service that is causing harm. And the way that we evaluate that is really think about if we want to root for what we own and take an embrace approach and identify positive aspects of a business and underlying products and services, we want to find those that are creating value for the neighbors of that business. We often say we want to take a love your neighbor approach to investing, which I can appreciate is maybe a bit uncommon on Wall Street. But first, we have to identify who the neighbors of a business are. And so through Business 360, we've identified customers, employees, supply chain, host communities, environment, and society as really the core stakeholders or neighbors of a business. And so in our process, we're looking to identify the products and services that are causing harm for those neighbors and avoid those, but then go beyond that and positively identify those that are creating the most value for neighbors and stakeholders and embrace those in our process. And then lastly, engage. We want to engage to make companies better. We want to engage on industry issues that we believe are problematic and where Eventide's voice can play a part. And we think that Business 360 offers a really differentiated product, and we can get into this in the ETFs themselves, but typically it leads us to offer strategies that are wholly different than the underlying benchmarks that they're seeking to either track as closely as possible or to just beat outright.
Can we define a little bit the concept of harm? So I get the concept of, you're not just buying a stock, you're buying almost like an entire value chain. Um, but are we thinking, is it just what you think about, for example, climate harm, environment harm? Is it, is it weapons? Is it, how do you define that? And is there a uniform, unanimous definition, or does this depend by client? How does that work?
Yeah, there's definitely ethical discernment in this process, but I would say generally it's pretty much everything you mentioned, right? It's anything that is not contributing to human flourishing and doing quite the opposite, whether it's destructing life, that could be anything from weaponry to um, other areas that are really negative from a life standpoint, abortifacients, abortion services, etc., um, to products that are leading to addictive behavior. And our view on that is maybe a bit broader. It goes beyond, gambling, alcohol, tobacco to violent video games, to social media, right? In our view, many of these companies that are offering those products and services, while there may be benefits, we think that the negative implications outweigh those positives. And so we're unyielding in our avoidance of anything that we believe is misaligned with a biblical view of human flourishing, and also unyielding in our pursuit of identifying the products and services that are aligned and are most directly contributing to positive outcomes.
When we think about the concept, the process here, and the systematic investing, how would you say this sits in the spectrum of passive versus active? Which I think of it as a spectrum. I don't think it's a binary thing anymore because there's so many benchmark hugging but overlay active strategies today that we call active. So, how should an investor think about where you sit in that spectrum?
Yeah, it's a great question. So these systematic ETFs that we've launched really are built on the foundation of 17 years of fundamental active investment success at Eventide. We've always really taken pride in our ability to, really understand these companies inside and out from both a quantitative and qualitative aspect, and then also identify the what we think is kind of the business 360 factor, which is that value creation and it as an underappreciated source of alpha generation, right? We want to win the investment game. We just choose to do so in a very specific, biblically aligned manner. The systematic ETFs really came about as our desire to serve our clients with the best vehicle and the best approach possible. And we can appreciate that passive is a prevailing trend in the industry. And there's a level of predictability there that I think clients and investors have become comfortable with. What we wanted to offer is something that kind of sits in between active and passive with our systematic lineup, where we're, again, as I mentioned at the outset, wholly different than the benchmarks we're seeking to, quote unquote, track as closely as possible. In many cases, we're screening out 50 to 70% of those index constituents. However, we want to then optimize that exposure, which is highly differentiated, to as close of a risk and return feel as you would get if you were directly investing in that index or an ETF that's tracking it. And so what we're hoping to create here is an ethical win-win, which is an opportunity to benefit from long-term equity market exposure, which we believe has proven time and time again to help investors reach their goals, but to do so with an ethical framework that is going to be highly aligned for a faith-driven investor's value system.
So, Mike, let's give some examples. Let's talk about some of the ETF examples. In your lineup, you have everything from a large cap blend fund, large cap value, large cap growth, dividend, small cap, I believe. So, given that these strategies by design are exclusionary of a lot of names in order to align with the values, how should we think through implementation in terms of a framework of core portfolio? Does it work for everyone? Does it only work for if you are in that values, the biblical values, framework? Or can anybody else use it to complement something else? How should you think through implementation?
Yeah, our view is that this approach to investing and a focus on value creation for stakeholders is good news for everyone. We believe this is just a wise approach to investing that has the opportunity to more persistently perform and deliver positive results over a long term or a longer term market cycle. That being said, we at Eventide are really seeking to go beyond being a product provider to being a true solutions provider and ultimately a growth partner for our clients. We do a lot of work with financial advisors and intermediary platforms. And we think for those financial advisors that are seeking to differentiate their practice, through a faith-based lens, these are truly differentiated products and solutions that are going to help them in that growth, in their growth efforts there. But we want to be combining these systematic offerings with our fundamental active strategies as well. And so that's how we think about it from a full portfolio solution. But in terms of the standalone products themselves, the small cap, ESSC, large value, ESLV, large growth, ESLG, we're really trying to track those respective benchmarks as closely as we possibly can. So in our case, we're benchmarking to Bloomberg. So large value is Bloomberg 1000 value, large growth is Bloomberg 1000 growth, small cap is Bloomberg 2000 small. And so our intention is to get as close as we possibly can to that exposure for our clients, but allow them to do that with the confidence that they're not profiting from products and services that they would view objectionable from a faith-driven lens.
So this is a lot of it, I would imagine, is about when if you're an advisor talking to a client, it really is about managing that expectation, because I would imagine there are times when you would get strong outperformance. There are times when you're going to lag the benchmark, depending if the market is really concentrated on some names that you may exclude, or maybe leaning into names that you have a lot of. So is that the focus of the conversation when an advisor is approaching a client?
Yeah. Yeah, it's a good point. And I think the Mag 7 that's been in focus for everyone, right? Just given how strong performance has been in that area. Through our business 360 process, we screen out 6 out of the 7. So NVIDIA is the only name that passes. And so our large growth ETF is unique, right? It's very differentiated. Most large growth products look very similar. They're exposed to Microsoft and Meta and names that fall within that Mag 7 contingent, whereas we're offering really differentiated exposure. Now, it can be challenging to keep up when the Mag 7 is running in the way that it has. However, we do believe that, again, over a market cycle, we have the opportunity to certainly track it closely and potentially outperform. But we think more importantly, we have the opportunity to offer exposure from an ethical standpoint that is not exposed to problematic areas like social media, like addictive behavior, like the products and services that are causing the problems that so many people are dealing with or beginning to deal with. And we think that is a really attractive opportunity and kind of sets up for that ethical win-win.
So Mike, you have, I think, 6, 7 ETFs. Correct me if I can't remember the total number.
Yeah, so we are at 5 currently, and we're about to launch our 6th, the Eventide Systematic International ETF, ESIM, which will be launching on the 17th.
Congrats. Any final thought as we look, we're in this, market outlook phase, looking to 2026, new calendar year, and a lot of folks are revisiting portfolio allocations. Any thoughts on where you either see opportunity or you're having a lot of client conversations with what they're focusing on? Any anecdotes you can share?
Yeah, so we think that this could be the alignment of faith-driven values and investment portfolios, we believe could be, a really influential trend moving forward in the marketplace. And our friends at Kingdom Advisors did a study recently that showed that 22 trillion, or nearly half of all public market equities, are sitting in the hands of church-attending Christians. And this is a story that many have not heard. But surveys that we've conducted show that the vast majority of those individuals would love to have their values aligned with their investment portfolios. They just haven't heard about that from their advisor. But even further to that, 60% said they would leave their advisor if they found someone who would offer them a values-aligned investment option. So we just think this is a persistent trend. We think this is a win-win, as I've mentioned a couple of times before. And we think for both retail investors as well as advisors, this is an opportunity to grow your practice, grow your investment portfolio, but with full alignment across the value spectrum.
Yeah, those are big numbers, Mike. For folks who want to learn more, where can they find more information?
So eventideinvestments.com, our ETF page, will have all the information that you may be seeking. Additionally, goodinvestor.com is a public screening tool that we've offered for investors that just want to check what they're exposed to currently, and just educate themselves further. So would encourage you to visit both.
That's a great place to start. Start by knowing what you own. So,
Yes.
Mike, thank you so much for your time today. Congrats on the upcoming launch, and we'll be in touch. Thank you all for joining us for today's episode of ETF 360.